If you think a human IRS agent sitting at a desk with a calculator is going to review your tax return this year, you are living in the past and putting your entire financial future at risk. Thanks to the massive $80 billion funding injection approved a few years ago, the federal government has officially weaponized artificial intelligence. And as of 2026, these supercomputers are fully online. The IRS is currently using advanced machine learning algorithms to scan millions of bank accounts, crypto wallets, and tax returns in a matter of milliseconds. Automated audit notices have already spiked by over 50% this year, and the system does not care if you made an honest mistake or intentionally hid income. If you trigger one of the new AI tripwires before the April 15th deadline, your tax return will be instantly flagged, freezing your refund and triggering a brutal automated audit. Welcome to ClearPath Tax, where we expose exactly how the IRS operates so you can protect your hard-earned wealth. For decades, the American taxpayer had a massive mathematical advantage over the federal government. The IRS simply did not have the manpower, the budget, or the technology to audit the average citizen. Historically, the audit rate for middle-class Americans sat comfortably below 1%. You could accidentally leave off a side hustle income or exaggerate a business deduction, and there was a 99% chance you would get away with it because a human auditor simply did not have the time to look at your file. But in 2026, that mathematical advantage has been completely wiped out. The IRS no longer needs human manpower to find your mistakes because their AI systems never sleep, never take a lunch break, and can cross-reference billions of data points instantly. The core of this new AI enforcement is a terrifyingly efficient system known as automated data matching. When you file your Form 1040, the AI does not just look at the numbers you typed in. It compares your return against a massive hidden ledger of third-party documents tied to your Social Security number. The computer instantly pulls your W-2s from your employer, your 1099-K forms from Venmo and PayPal, your 1099-B forms from your brokerage accounts, and your 1099-NT forms from your savings accounts. If the AI detects even a $1 discrepancy between what the banks reported to the government and what you reported on your tax return, it automatically generates a CP2000 notice. This is a computer-generated audit letter demanding back taxes, interest, and a 20% accuracy-related penalty. And a human IRS agent does not even have to push a single button to send it to your mailbox. If you are wondering who is on the AI target list this year, the absolute #1 priority for the IRS in 2026 is cryptocurrency and digital assets. The IRS knows that millions of Americans have been treating crypto like the Wild West, trading Bitcoin, Ethereum, and NFTs without ever reporting the gains. Their new AI algorithms are specifically designed to track blockchain transactions and match them to KYC data from major exchanges like Coinbase, Kraken, and Binance. There is a mandatory question at the very top of your 2026 tax return asking if you received, sold, or exchanged any digital assets. If you check the box that says no, but the AI detects a crypto exchange transferring money into your checking account, you are not just looking at a standard audit, you are looking at federal charges for perjury and tax evasion. The second massive target on the AI hit list is the small business owner, specifically anyone filing a Schedule C for a sole proprietorship or a single-member LLC. The machine learning algorithms have been fed decades of historical tax data, allowing them to instantly recognize what a normal business looks like in your specific industry. If you claim to be a freelance graphic designer making $60,000 a year, but you attempt to write off a $40,000 heavy-duty truck and $20,000 in luxury dining, the AI immediately flags your return for being statistically impossible. It compares your deduction ratios against millions of other graphic designers across the country. If your expenses fall outside the AI's acceptable standard deviation, your return is pulled from the automated processing line and sent directly to a specialized human audit examiner. For high-income earners and real estate investors, the AI has been specifically trained to dismantle complex partnerships and multi-tier LLC structures. In the past, wealthy taxpayers would hide their income inside a maze of holding companies. Knowing human auditors did not have the resources to trace the money through 5 different shell corporations. The 2026 supercomputers can map out these complex webs in fractions of a second. The IRS has publicly announced that they are using AI to open examinations into the largest and most complex partnerships in the United States, specifically looking for balance sheet discrepancies and illegal tax shelters that were previously invisible to the naked eye. The most dangerous part of this technological shift is that the excuse of simply not knowing any better is completely dead. If you get audited in 2026, you cannot just tell the IRS that you forgot about a side hustle or lost a receipt. The AI assumes that if the data was available to you, the omission was intentional. This means you can no longer afford to rush through your tax return on April 14th using cheap online software, guessing at your business expenses, and hoping for the best. You must ensure that every single digit on your tax return perfectly matches the documents the IRS already has in their database, because the computer is going to check your math before your refund is ever approved. If you have not filed your taxes yet, this is your ultimate warning to slow down and double-check your work. If you are missing a 1099 form, or if your bookkeeping is a mess, do not file a guest return just to meet the deadline. You are much better off filing a free 6-month extension to get your numbers perfectly accurate, rather than triggering an automated AI audit that will legally haunt you for the next 3 years. If this video helped you understand exactly what you are up against this tax season, hit the subscribe button right now to join ClearPath Tax. Drop a comment below if you are terrified of this new IRS technology, and I will see you in the next video. The true terrifying reality of the 2026 AI rollout is that it does not just look forward, it has the memory of an elephant and the processing power to look backward. Under the federal statute of limitations, the IRS generally has 3 years to go back and audit your old tax returns. But if they suspect a substantial understatement of income, that window doubles to 6 years. The new supercomputers are not just scanning the tax return you are filing this April. They are actively cross-referencing your new data against every single return you filed during the pandemic. If you claim a massive loss on your business this year, the AI instantly looks at the PPP loans, the employee retention credits, and the unemployment benefits you claimed 3 years ago to see if the math still adds up. This backward-looking AI capability is currently causing absolute panic among people who overclaimed the home office deduction or the vehicle mileage deduction in the past. For years, tax professionals warned small business owners not to get greedy, but millions of people ignored that advice, writing off 100% of their personal cell phone bills, their entire internet bill, and thousands of personal miles driven in their cars. The new AI algorithms are specifically programmed to detect these exact behavioral patterns. If you claimed that your 2-bedroom apartment was 90% dedicated to your freelance business in 2023, and you are trying to do it again in 2026, the computer flags the statistical anomaly and initiates a multi-year correspondence audit. One of the most insidious ways the IRS is using this new technology is through a program called the Discriminant Inventory Function, or the DIF Score. Every single tax return filed in America is secretly assigned a numerical DIF score by the AI based on its probability of containing hidden tax revenue. The higher your score, the higher the likelihood of a human auditor knocking on your door. In the past, the formula for this score was relatively basic, relying on simple math errors or unusually high charitable donations. But in 2026, the AI has upgraded the DIF scoring system to include predictive modeling. The computer predicts what your income should be based on your zip code, your profession, and the size of your mortgage. If you live in a multi-million-dollar neighborhood, drive a luxury vehicle financed through a major bank, but your tax return claims you only made $40,000 last year, the AI instantly recognizes the lifestyle discrepancy. It knows that your reported income cannot mathematically support your real-world expenses. This triggers a massive red flag, pushing your DIF score into the danger zone, and practically guaranteeing a forensic audit of your lifestyle, your bank deposits, and your credit card statements. The IRS no longer needs a whistleblower to tell them you are living beyond your reported means. The AI figures it out automatically. For W-2 employees, the AI is equally ruthless when it comes to the Earned Income Tax Credit and the Child Tax Credit. Historically, these two credits have had some of the highest fraud rates in the entire tax code, with billions of dollars paid out incorrectly every year to people claiming dependents who did not actually live with them. The IRS AI now cross-references your claim dependents against school registration databases, medical records, and the tax returns of your ex-spouse. If 2 divorced parents accidentally claim the exact same child on 2 different tax returns in 2026, the computer instantly rejects both returns, freezes both refunds, and demands legal documentation proving physical custody before releasing a single penny. The ultimate defense against this unprecedented level of digital surveillance is absolute meticulous documentation. You can no longer rely on a shoebox full of faded receipts or a mental estimate of your business expenses. If the AI flags your return and triggers an audit, the burden of proof is entirely on you to defend your numbers against a machine that has already decided you are guilty. You must digitize your receipts, maintain contemporaneous mileage logs, and keep separate bank accounts for your business and personal lives. If you are terrified of making a mistake this year, the smartest move you can make is to stop treating your taxes like a once-a-year chore and start treating them like a year-round financial strategy. Hire a licensed enrolled agent or CPA who understands how the new IRS algorithms operate, and never file a return that you cannot mathematically prove with hard evidence. The federal government has spent billions of dollars building a machine designed to take more of your money, and ignorance is no longer a valid defense. If this breakdown opened your eyes to the new reality of the 2026 tax season, Make sure to hit that like button, subscribe to ClearPath Tax, and drop a comment below letting me know if you think this new AI system is an invasion of privacy. I will see you in the next video.